Hey guys, welcome back to Entrepreneur Pod. Today we'll talk about why you should never take out a loan. Let's head into it. Number 7, 0% purchases credit cards.
But please make sure that your passive income has practicality to it, because all the people that have tried to create systems and automate their cash, there's been a very small percentage of people that...
If you need to buy something but don't have the cash available, a personal loan might seem like the obvious choice, but a 0% on purchases credit card could be a far cheaper option. The best cards will give you a whole year of interest-free credit. You could try the Sainsbury Finance Nectar Card credit card as long as you have a Nectar card, or you're happy to sign up to the Nectar scheme. You can do that easily online using this link. Alternatively, the Tesco Club Card credit card is another good choice, which also gives you a break from interest on your purchases for a year. Again, you'll need to have a Tesco Club card to qualify. Just remember, if you're borrowing on a 0% on purchases credit card, you must clear your debt within the introductory interest-free period, or the far higher standard APR will kick in. Number 6, low-rate credit cards. If you don't think you can manage to pay off your debt within a year, you could go for a low APR credit card instead. This type of card will charge less interest than a personal loan and should stay that way until you have paid everything off. A great choice here is the Halifax Easy Rate MasterCard, which charges just 6.9% on all of your purchases, beating all current personal loan rates by miles, no matter how much you want to borrow. Number 5, Zopa. Alternatively, you could ignore traditional ways of borrowing altogether and try Zopa. If you've never heard of it before, Zopa is an online peer-to-peer lending business which brings borrowers and lenders together. It's a simple idea. The lender earns a return on the money they loan out from the interest paid back by the borrower. I really like Zopa because it completely cuts the bank out of the loop. What's more, you can lend at potentially much cheaper rates. For example, you could borrow £2,500 over 3 years at a rate as low as 10.9%. This is significantly less than the rate charged by the cheapest loan for this amount. To find out more, check out the Zopa website. Number 4, 0% overdrafts.
Now, we all have different ambitions and goals. Do I think that it's easier to create $60,000 a year in passive income on the internet today? I sure do. And if that's what your goal and ambition is, that's more practical than millions.
Another way of getting around pricey loan rates is to switch to a current account with an interest-free overdraft facility. There are some great choices here. In the Alliance in Leicester Premier Direct Current Account, both accounts offer a 0% EAR overdraft of up to £2,000, with a whole year to pay back what you owe. Note that these accounts must be funded with at least £500 a month. Remember, once the year is up, any remaining overdraft debt will be subject to a daily usage fee of up to 50 pence, up to maximum of £5 a month. So do try your best to get your account back in the black as soon as you can. Meanwhile, Santander offers the preferred overdraft rate account, which also comes with an interest-free overdraft for a year, depending on your circumstances. After the introductory offer is finished, you'll be charged a rate of 12.9% EAR. So once again, it's in your best interest to clear your debt as early as possible. Number 3, cut your costs by borrowing more. Finally, if you're still convinced a personal loan is the way to go, there's a sneaky way you may be able to cut your costs by borrowing more. That might sound like a ridiculous advice, but personal loans usually work on a tiered pricing system where the more you borrow, the lower the rates generally are. Let's say you need to borrow £4,950. The most competitive option here would be the Sainsbury Finance Nectar Card holder personal loan, which charges the rate of 11.9%. But if you borrowed slightly more, so your loan increased to £5,000, the rate would drop to just 8.8%, and repaying that higher loan over 3 years would actually save you £180. Can't be bad. Just remember, you need to have or apply for a Nectar card to qualify for this particular deal. Number 2, don't borrow unless your loan will help improve your finances.
Millions of dollars in passive income on the internet, smoking weed in Jamaica while it just keeps coming in is just not as real as you think.
Personal loans can help you with your financial situation, but only if you take out a loan for a good reason. Making smart choices about how and when you borrow will allow you to limit the interest you owe. That way, you can avoid committing too much of your money to debt repayment, and you can free up your savings for other important financial goals. Number 1, paying for your unnecessary and unaffordable purchases. Although a personal loan can be used to make big purchases, it shouldn't be used to purchase anything you don't really need. Lenders market personal loans for all kinds of purposes, from luxury vacations to big weddings. But taking a debt on optional purchases is bad news. When you borrow for something unnecessary, you're hurting your future self because you're committing money you haven't earned yet to paying principal and interest. It's going to be harder to live on a budget going forward when you've got a monthly loan payment to make, and you could be forced to shortchange your savings during the payback process. You're also paying more for your unnecessary purchase due to the interest you'll owe on the loan. So just don't do it. If you can't afford to pay for something fun and frivolous out of pocket, wait wait and save up for it, or cut costs instead of borrowing. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.